Welcome back to the Asset Move. We are your strategic asset analysts.
And if you've been following the channel, you know we don't just read the headlines.
No, we strip them down to the studs. We want to see who is actually controlling the frame.
We talk a lot about narrative sovereignty here. Who owns the story of value?
And today, we are locking onto a signal that has been, let's say, jammed for about 200 years.
It is time to clear the noise. We're looking at a figure everyone thinks they know.
Mm-hmm. You see the portrait on the $1 bill?
You think of the wooden teeth, the cherry tree, the general crossing the Delaware.
It's the elementary school version.
Right. But if you look at the raw data, specifically the financial history of the revolution, you see a completely different operator.
This is the man we are calling the 17th Guardian of the Bitcoin Chronicles.
I love that title. It sounds like something out of, I don't know, a sci-fi novel.
It does, but when you read the source material, George Washington's Monetary Integrity and the Digital Arc, it fits perfectly.
It really does.
The mission for this deep dive is to prove that Washington wasn't just fighting a kinetic war against British bayonets.
No, he was fighting a shadow war.
A war on two fronts.
Exactly. One was against King George III, sure. But the other, and arguably the more dangerous one, was against what he called the wicked fraud.
The wicked fraud of unbacked paper money.
That phrase, wicked fraud, it really sticks with you.
It does. It doesn't sound like a policy disagreement.
No, it's a moral condemnation.
It absolutely was.
And in the core thesis we're extracting today is that Washington was a hard money radical.
He viewed the printing press not as some policy tool for economic stimulus,
But as an engine of national suicide.
and the system he tried to build in 1792, it wasn't just a set of laws.
No, it was a protocol. It was designed to strip politicians of the power to steal your time.
Okay, so let's get strategic. To understand why he went to such extremes later, we have to understand the trauma first.
We have to go back to 1775.
The Revolutionary War kicks off. The Continental Congress, they need to buy gunpowder, uniforms, food.
But they have a massive problem.
Which is?
They have zero revenue. The Continental Congress had no power to tax the colonies.
So they were effectively broke from day one.
Completely. So they did what every desperate government in the history of the world has done.
They turned to the printing press.
The path of least resistance.
Always.
In June 1775, they issued the Continental currency. Now, the pitch to the public was simple.
Okay.
They said, this piece of paper is worth one Spanish mill dollar.
Which was the standard at the time, right? The global silver coin.
Right. So 1 to 1, it felt safe, it felt solid.
It always starts that way, doesn't it? We're just going to print a little bit of liquidity.
To bridge the gap until we win the war. It's always the sales pitch.
But the math of fiat currency is undefeated.
You cannot cheat supply and demand. And between 1775 and 1779, Congress didn't just print a little.
No.
They emitted somewhere between $199 million and $241.5 million.
Give us some context on that number, because today, 200 million is a rounding error for the Pentagon.
Right. But back then, the entire money supply of the colonies was a tiny fraction of that.
So they just flooded the zone.
Completely flooded it. Orders of magnitude.
Yeah.
And to make matters worse, and this is a key variable, you had the British engaging in economic warfare.
This was the part of the deep dive that really surprised me. I mean, I knew about the battles, but not that they were attacking the ledger itself.
It was a deliberate strategy. The British realized they didn't just have to beat the Continental Army on the field.
They could destroy trust in the American economy.
Exactly. They set up printing presses in New York and just flooded the colonies with counterfeits.
Yeah.
They were literally giving them away or selling them for the price of the paper. It was a denial of service attack on the currency.
So you've got Congress printing to pay bills and the British printing just to crash the system.
What do you think that does to the exchange rate?
It has to create a collapse.
A vertical collapse, a total evaporation of value. By January 1781, that 1-to-1 parity, gone.
How bad was it?
It was trading at 100 Continentals for just $1 of gold or silver.
100 to 1. So if you were a patriot and you held on to your savings in Continentals, you were wiped out.
Completely rugged. You lost 99% of your purchasing power.
And that's where we get the idiom, right? Not worth a Continental.
Yeah, we use it today as this quaint old saying, but at the time that was a statement of total insolvency.
It was real.
It represented the complete evaporation of trust between the government and its people.
And this is where the narrative shifts from just economics to to real tragedy. Because George Washington isn't watching this from a bank in Philadelphia.
No, he's watching this from the front lines. He's at Valley Forge.
This is the commander's agony.
And you have to strip away the romance of the history books. We are told the soldiers at Valley Forge were starving and freezing because the young nation was poor.
Yeah, that there was no food.
That is technically incorrect.
That blew my mind. There was food.
There was plenty of food. Pennsylvania had bumper crops that year.
So there were shoes, blankets, meat.
All of it. But the merchants, the farmers and suppliers, they refused to sell to the army.
Right.
Because the army was trying to pay with garbage paper money.
So the merchants just sold to the British instead?
The British paid in gold. If you're a farmer, are you going to trade your harvest for a piece of paper that loses half its value by next week?
Or for gold that holds its value forever?
Washington watched his men freeze and die, not because of a lack of resources, but because of a failure of money.
That hits hard. Washington had a quote about this, didn't he? From April 1779.
Yes, he wrote to Congress, "A wagon load of money will scarcely purchase a wagon load of provisions."
A wagon load of money. Imagine the logistics of that.
You had to cart in physical mountains of paper just to buy bread.
And for Washington, this wasn't just bad policy. This was a moral crime.
It was state-sponsored robbery. That's the only way to frame it.
I mean, think about the soldier's perspective.
You leave your farm, you sign up to bleed for your country, you're promised a wage.
You fight for 3 years.
And when you finally get paid, the currency is worthless. The government has effectively stolen your labor.
While the speculators, the guys staying safe in the cities, were making a killing.
Washington called that the obvious source of immorality. He saw speculators thriving while the honest labor of the soldier was plundered.
And this all came to a head, right? The Newburgh Conspiracy in 1783.
That was the breaking point. The officers were ready to march on Congress. They were ready to launch a coup because they hadn't been paid in anything real.
The Republic almost died before it was even born.
Specifically because of fiat currency. Washington barely talked them down.
But that moment...
It seared a lesson into his brain. If the money is broken, the country will collapse. Freedom requires honest money.
That context changes everything. It explains why he was so extreme, so radical, when he finally got the chance to design the system.
He wasn't just trying to organize a bank.
No, he was trying to build a shield against this ever happening again.
Exactly. He viewed the 1792 Coinage Act as a shield against human corruption. But first, he had to lock it into the Constitution.
Article 1, Section 10.
Which strips the states of the power to print bills of credit. It basically says, you cannot print magic paper. Only gold and silver are legal tender.
And then comes the Coinage Act of 1792. Our source calls this the architecture of hard money.
It is.
But I want to pause on definitions here, because we use the word dollar today like it's just a concept, a number on a screen.
Right. Today, a dollar is a floating abstraction. It's whatever the Federal Reserve says it is.
But in 1792, the Coinage Act defined the dollar as a specific weight.
A physical measurement. Specifically, 371.25 grains of pure silver.
Or if you use gold, the eagle was 247.5 grains.
Correct. So it wasn't a government decree. It was a measurement of mass.
Like a pound or a foot.
Exactly. The government can't just decide that a foot is now 6 inches long.
Yeah.
A foot is a foot. And a dollar was 371 grains of silver.
And they had this concept of free coinage. Can you explain that? Because to a modern listener, free coinage sounds like free money.
Which is the exact opposite of what he wanted. It's a crucial distinction.
Okay.
Free coinage meant free access to the mint. It was the ultimate free market money.
Meaning the government didn't control the supply.
You, the citizen, did.
So if I have silver, I control the money supply.
In a way, yes. If you had silver bullion or foreign coins or even old silverware, you brought it to the mint.
And they'd, stamp it for you?
They'd assay it to check the purity, stamp it into official U.S. coins for you for free, and give it back. The government couldn't print more silver.
They could only verify the weight of what the market provided.
There's that great legend, I love this personal touch, that the first half-dismans were actually minted from George and Martha's own silverware.
It's likely true. It just shows the level of personal commitment.
They were literally melting down their own household assets to seed the liquidity of the new nation.
But if we want to talk about how serious Washington was, how much of a radical he was,
we have to talk about Section 19 of the Coinage Act.
This is the part that it's just unbelievable. When I read this in the source material, I had to double check it.
Because we're used to bankers getting, what, a slap on the wrist?
Right. Maybe a fine they pay out of company profits. If you crash the economy today, you get a bonus.
But Section 19 deals with the penalty for mint officials. If an official was caught debasing the coin,
Meaning, if they shaved a little silver off or mixed in some base metal to cheat the public,
what was the penalty?
it wasn't a fine, it wasn't jail time.
It was death.
The penalty was death.
Let that sink in. For Washington, stealing the purchasing power of the people wasn't monetary policy.
It wasn't quantitative easing. It was a capital crime.
He equated it with treason. You have to remember the trauma of the war. He saw debasement as stealing the life force of the citizenry.
If you dilute the currency, you're stealing the labor of every single person holding that coin.
You are reenacting the tragedy of the Continental. He saw it as a violation of public trust so severe that it warranted execution.
That is the intensity of the hard money radical we're talking about. He wasn't playing games.
No. And this brings us to the philosophy behind it. Why does this matter?
Our source talks about the time preference war. Let's unpack that.
Okay, so time preference. It's the difference between thinking about today versus thinking about the future.
Right.
There are two types of money. Credit-based paper, like the Continental or the modern dollar, drives high time preference.
High time preference meaning I need to spend this now because it won't be worth anything later.
Exactly. It encourages consumption, speculation, gambling. It destroys the incentive to save because saving is a losing strategy.
And it degrades the moral fabric.
Because everyone is rushing to get rid of the hot potato. Washington saw this moral decay firsthand.
Versus hard money, low time preference.
Low time preference builds civilization. If you know your money will hold value for 10, 20, 50 years, you save.
You build. You invest in the long term. You plant trees.
Washington called this public faith. He believed that anchoring the dollar to silver and gold was the only way to build a nation that looked toward the future.
Which brings us to the uncomfortable reality of today. We've established the trauma, the solution, the philosophy. But if Washington walked into the Federal Reserve in 2026, what would he see?
He would see the Continental nightmare on a global scale.
Since 1971, when we severed the gold link.
We have been living in a fiat experiment. The source material is very clear on this. Quantitative easing is not some sophisticated banking tool.
It's a modern reenactment of the printing press that starved the soldiers at Valley Forge.
It is the plunder of the poor via inflation. The mechanism hasn't changed, only the scale has.
Correct. We are watching the purchasing power of the common person just evaporate to bail out a system of debt.
Washington would recognize this immediately as the wicked fraud he fought against.
And this is where the narrative bridges to the digital age. This is the strategic pivot.
Our source claims that Bitcoin is the mathematical completion of Washington's unfinished work.
It's the digital arc.
Think about the defect of human nature. Washington knew that if you gave a politician the power to print money, they would abuse it.
So he tried to solve it with geology, gold and silver.
But geology has a flaw. Gold is heavy. It's hard to transport. And as we saw in history, it's easy for a government to seize it and centralize it.
Physical assets can be captured.
Enter the code. Bitcoin takes Washington's intent, a measure of wealth that no one can debase, and moves it from the physical realm to the mathematical realm.
Washington relied on the scarcity of silver.
Bitcoin relies on the scarcity of the number 21 million.
It's the immutable protocol.
That is the key word, immutable. Washington feared political whim. Bitcoin is apolitical money.
There's no king, no Congress, no Federal Reserve chair who can decide to print more.
Not to pay for a war or a bailout. It is an asset-based monetary order reborn for the digital age.
I like the framing of the digital arc. The idea that we are in a flood of liquidity, a flood of fake paper, and we need a vessel to protect our labor.
And that's why the price action of Bitcoin is often misunderstood. When you see the price go up, don't just think Bitcoin is getting more expensive.
Think of it as a mirror.
It's reflecting the collapse of the fiat currencies against it. It's the modern Continental losing value against digital gold.
It really recontextualizes the volatility. It's not the asset that's volatile.
It's the measuring stick that's breaking.
Precisely. Washington's first priority after the war wasn't to expand the territory. It was to fix the money.
He knew that without a stable measure of wealth, liberty is just a word.
You can't be free if the government can drain your bank account by printing money 3,000 miles away.
Freedom dies when money becomes a political slogan. That's the line from the source that defines this for me.
It is the strategic conclusion of our entire analysis. The 1792 Coinage Act was the original protocol for liberty.
But it failed, eventually, because physical gold can be centralized and unpegged.
But Bitcoin?
Bitcoin is the weapon for the 21st century digital war for independence. It is the unseizable, undebasable standard that Washington was reaching for.
It's the completion of the vision. Washington fought for sovereignty with a musket.
We fight for it with cryptographic keys.
And the stakes are just as high. We're talking about the sovereignty of your time and your energy.
If you work for a currency that leaks value, you are leaking your life.
So here's the takeaway for you listening. Don't look at this history as dusty dates and old men in wigs. This is a blueprint.
George Washington identified the enemy: unbacked political money.
He identified the solution, an asset that cannot be printed.
We are living through the legacy of the Continental every time we go to the grocery store and see prices rise.
That is the ghost of 1779.
The question is, do you have your shield? Do you have your arc?
Reclaim your sovereignty.
That is the only move left on the board.
George Washington's 1792 mandate was the original protocol. Bitcoin is the upgrade. You have the intel. Now it's time to decide what you do with it. Stay strategic.
Stay strategic.